All right, here we go. We're watching for Intel. I decided I am going to buy a call on Intel once things resolve. We got a 5-minute thing here that needs to resolve on bonds before they maybe a 1 hour, but not the daily. Daily's turning over. So I believe the bonds are going to decline, not just for one day, but for a few days at least, and that the markets are going to rally. Right now, we've got a 5-minute down cycle on the S&P, but if you look at the hourly, like I said, I don't think this hourly, once it crosses and starts to move up, I don't think it'll get much further than this. As far as where the MACD is, got a long way to go to match that, but technically, I think it should bottom out right there before it makes the final trip down here. That's in a lot bigger scale than we're looking at right now. Right now, we just want to see this. One-hour chart start to move up, but not until the 5-minute resolves. We have this 5-minute thing going on here. Don't know if it's going to cross and just get stuck here, or whether this is going to pull up and rally. However, let's go back to Intel. Now, I started this video when Intel finally fell back far enough to call it a valid 3-wave. So now I'm just waiting for the 5-minute to resolve, and I'm going to take a call out on Intel, looking for a retest of this broken 10. This doesn't qualify. This is a waterfall. This need is a good solid retest attempt, and then I want to short it because it's the crappiest stock on the Dow. Well, it's not the crappiest, but well, they're all crappy right now with some standout exceptions. In fact, if you sub up right after this, I plan to do a report on the only Dow component I would even consider for a long-term investment at this time. And even then, in a general market downdraft, generally it takes everything with it. So there's that caveat. But I will show you what I consider to be a good company, and it's the only, a good company, good valuation, solid earnings, all that good stuff. But it's the only company on the Dow that qualifies. None of the others that have favorable valuations have decent earnings. They're all undervalued because the earnings are junk, and earnings are going to continue being junk, at least according to consensus analysts, till the end of the year, minimum. And then, of course, they say, oh, estimates are going to grow next year, but next year and the year after, that's all la-la land. Yeah, the market trades on that stuff, but it's la-la land. None of those estimates are going to be anywhere near reality by the time reality gets there. And I'll guarantee you that, and I'll bet 100 dirty socks. And, anybody wants to take me up on that bet, we can come back next year and see where those estimates went in a year and a half, a year and a quarter. I guarantee you they won't be anything like they are today. Jesus. I want to keep track of the time because I don't want the video to just end mid-sentence, which happens a lot. So we're waiting for this 5-minute to resolve. We have enough of a downtrend, down move to actually call it a 3-dip, but I don't think it's done. I think it's going to come down a little bit more. Technically, we got a little double bottom going here too, see? Exceeded on the open, but this only, even though it's a valid price, this only lasted a few seconds. I know because I bought on the open as soon as I could. We're S&P futures. I bought on the open as soon as I could, and that ended up being like around here. And this, we're talking 30 seconds. So that was my first indicator that, yeah, we're going to get a rally. Now look at this. We've got a double up on the S&P 5-minute. I was expecting it to roll over at some point and test this, but instead it's double rolled, which means it's probably going to triple roll up, because these things tend to go in threes. And as you may have noticed, I'm a big proponent of the number 3. And counting the 1, 2, 3 before you make your trade. I'm trying to get better at that. So the 5-minute on 30 started to turn up. Hopefully we'll get a little double wave and it'll push up, and it'll push the markets down, and it'll push Intel down so we get a better price. And this is a 100% technical trade, by the way. Intel is crap as far as earnings and all that. I mean, it may be a great company right now, but for the next 6 months, you know, they're not going to do well. Their earnings are going to drop. Their 12-month net earnings are like negative 22. I don't remember what the operating earnings are. Let's take a look. 90. Made 92 cents operating, but they took a huge charge. I think we already went through this in the last video. One thing I didn't go is they dropped their dividend. The rate, now I use the dividend rate, which is one of the reasons the yield on my index is higher. Dow Industrials Composite, Dow Jones Company, uses dividends actually paid. And since all of the Dow components raise their dividends every quarter or biannually, if you go by dividends that have already been paid out, you're including lower dividends. And Dow components, even when they're losing money, even when earnings are junk, they raise their dividends. That's the big thing about Dow companies. They regularly raise their dividends quarterly or biannually. So when a Dow component cuts its dividend, it's a big deal. But the reason my yield is higher than the composite Dow Jones company's yield is that I use the rate. And the rate is, you can look this up by the way, the rate is the latest dividend, quarterly dividend multiplied by 4. So this is the future rate, and the Dow Jones Industrials Composite compares the past rate, the last 12 months, which will include dividends that were lower because every quarter Dow components raise their dividends. So I use the rate, which is still conservative. It's just the latest quarter dividends times 4. If the company doesn't raise their dividend, you'll make the dividend rate. But they always raise the dividends for the most part, 90% of the time. So this is actually a very conservative rate. And I would say the Dow rate is kind of stodgy. I mean, it's not forward-looking at all. So I prefer the rate. And the rate is still a conservative number for those of you who may be concerned about the fact that I use the rate. And you're welcome to look at here and see how few companies are estimated to actually grow their earnings this year. And there aren't many. I mean, either the 52-week is lower than the last fiscal year and they're in decline, or they're estimated to be in decline. Now, this one is American Express is red because it's lower than the last fiscal year, although the last quarter was pretty good. Both sales and EPS were above the estimated growth, but the PE to growth is ridiculous. You want to see this number should be 1 for fair value, and anything below 1 is overvalued. Think of it, whatever the difference is between this number and 1 is how much you're going to potentially lose. Probably not that much, but you know, this is pretty minimum. You want to see this at 0.5. Dow components could be said to be fairly valued at twice the growth rate as a PE. So if it's growing at 10%, a PE on a Dow component of 20 would be acceptable, but that's not 100%. Like for instance, Dow Chemical generally has a low PE, no matter how high its growth rate is. You know, certain companies are just kind of stodgy with their PEs. Anyway, let's get back to the trade. By the way, you should take a screenshot and save this because you're not gonna see this again. I'm thinking about putting it up quarterly, free for the YouTube channel. But the weekly updates, I'm going to be stingy with them. All you're going to see is what's reported that week, like last week, Disney. That's all you get for free. Weekly. This probably quarterly. I could give this up quarterly, but not weekly. Too much work in updating it. Not automated. So Intel, this 5 minutes still is resistant to going down. 10 minutes, 11 minutes past now, got 4 minutes. And I'm getting impatient. You know me, I'm impatient. Okay, it's 5 minutes, kind of turning up a little bit. See, this 5 minute might fail. And then we've got the hourly might fail. And then we've got the daily will roll over. I already know the daily will roll over. I'll send you 100 pairs of dirty socks if it doesn't. I like betting dirty socks, by the way, because nobody wants them. So it's a safe bet. S&P only down 4.9. I'm up. Oh, I got to be up more than that. 10%. Still going up. Intel, I think this may resolve up and break out, to tell you the truth, i.e. MACD breakout. With this small of a 3-wave, it would probably be prudent to wait until Intel exceeded this high. But I'm impatient, so I'm going to buy a contract. Just one, a small one. Buy a small one and they can load it up if that 3-wave turns into something more appropriately sized. How much do I want to put into it? Not much. See, I like these because the spreads are narrow. 36 call. Well, it's not going to get to 36, but it could look a lot more likely. You know how people get FOMO once it starts moving up. I think this MACD is going to cross up. I really do. I'm going to go ahead and take how much do I want to put in it? I'll leave enough to double the SPX puts, even though I don't think it'll be necessary. Let's control, refresh, any change. 27, 28, 45. I want to get a little bit closer to the money. And this is getting more expensive than I want to pay for a contract. When I get my account back up, yeah, okay, but now I want enough to double down and still double down on the SPXS, so that would be this contract. So potentially a $100 position. 45, 46. Let's play with the limit for a minute. See if I can actually get the bid. Yeah, see this 1 hour? Here we go. I think it's time to buy. So I'm just going to raise my bid a little bit. Get there right between 45, 46. What's the open interest? 32,000 contracts. That's going to be really liquid. I like that. All right, so we're long Intel. I'm going to get this video uploaded. So I like to get the videos uploaded within 5 minutes after I do the trade. It's Dow Jones Dave checking out. Oh, yeah, remember the rule on this is you go to your 5 minute